Kyle, mate, thanks so much for coming on the show. If you give a quick little run through of your background, what it is you do, what you've built, what you do now, that'd be awesome, man.
Yeah, sure. Thanks for having me, by the way. So I'm a co-owner of Milk Road, which is one of the larger newsletters in the crypto space. Our goal here is just to help people capitalize on crypto and help them become better investors. We've got about 300,000 subscribers to our newsletter, and then we've got a pretty big podcast and YouTube channel as well there. And so that's really cool. And then we also have a marketing agency that works specifically with crypto brands and protocols. We've been running this for about 5 years now, called Impact 3. So this is kind of like our world of helping crypto grow, helping them learn how to write good copy and like help them actually write and have websites and create content that like people can actually understand, because it's a big challenge in the crypto space. So that's kind of what I'm doing right now. Both the things that we're me and my business partner Jay are working on. But I've been in building businesses in the creator economy for more than a decade, and I've been investing in crypto / let's call it like newer asset classes, or not necessarily asset classes. Let's call it like newer industries for a while. So I'm Canadian, so a while back I was investing in weed companies and kind of the weed stocks before that became legal in Canada, and so did really well there. And then also in the like social media and internet phase for many years as well. So it's been kind of a big part of me is like understanding risk and understanding kind of like where the puck is going and trying to be involved in that.
Okay. So yeah, early to things, huh? Yeah.
That's the goal.
Hey, that's it. At the moment, we're seeing a bit of like a bounce. I feel like everyone's getting a little excited. I think the timeline's flipped, somewhat bullish, kind of instantaneously. I think a lot of people are like, oh, did you long the bottom? And you're like, okay, sure. I don't know. And I saw you posting about this on Twitter the other day. It was talking about how some people are saying that the bull market hasn't started, while others, and let's get stuck into that. Is the bull market just beginning, or is it already over? What's your take?
I would say it's neither of those things. Yeah, I mean, there's a lot of people, crypto natives specifically, that are like, the crypto bull market hasn't really started because they've been holding ETH or a bunch of altcoins, and obviously that hasn't done so well. And so a lot of people kind of missed a lot of what's happened in the last 2 years. But I mean, if we look at crypto, the total market cap, in the last 2 years, it's up like 4.5x, right? In 2 years, that's insane. And before this pullback, like obviously we're in a big pullback right now, but those happen often in crypto. Before that, we were up like 6x on total market cap in a matter of 2 years. So like, are we in a bull market? 100% we're in a bull market. There's just not even any disputing that. The NASDAQ is up like 90%, even with this current pullback, more than 100% without the pullback. And so like we're in a bull market in tech stocks. We're in a bull market in crypto. There's no disputing that. Now, is it over? Are we going to a bear market? That's kind of starting to pick up the narrative, at least on crypto Twitter. And I think we're not there either. I think while it's not early days in the bull market, I do think we're sort of in the middle. We tend to do our analysis around crypto, and the way that we look at it and understand our investment framework is around the business cycle and the liquidity cycle. And neither of those have just started, and neither of those have topped. They both seem to be kind of in the middle. Now, this pullback that we're currently in, we actually wrote a report on December 8th, and said we think that there's going to be a 30% pullback. And somehow we're exactly 30% right now with Bitcoin. So we sort of nailed that. We didn't expect it to be this long. And I think what's happening and why people are so confused on the market right now is like, I think oftentimes people realize like we have 20-30% pullbacks. Like those are pretty normal, but they're usually quite quick. This one has now been, let's say, what are we at, 3 months, a little more than 3 months now. It kind of started in December. And I think what's going on here is there's just a weird dynamic going on with Trump taking office. And the US isn't really playing ball like the rest of the world wants. They're not printing money right now. They're not lowering rates right now. And I think everyone thought that by now they would be. And the reason for that is Trump and his administration, they've got to get some things figured out in their economy before they can really like start to take off and do what they need. And so they're actually, in my opinion, doing a bit of a growth scare right now. They're trying to not necessarily get markets down, but they're trying to get growth down, inflation down, rates down, because they have about $9 trillion that they need to refinance this year. And so that is putting a little bit of a pin in everything right now, and it's kind of holding markets because everyone is uncertain. They don't know what's going on with tariffs. They don't know what's going on with the administration, et cetera, with Doge, with what Elon's doing. And so I think we're in a bit of an extended pullback, but I don't think that this stops the bull market. I think if anything, and I've been saying this for a while, I actually think we're going to see an extended bull market into 2026. Most people are kind of calling for a top either in like April 2025 or October-ish. And I think we're actually going to extend into 2026. So I think there's actually a lot of good things ahead. And so I wouldn't be pulling out of markets right now, that's for sure.
So like more of like a right translated cycle longer term. And I think that's a big thing that's happened this time is that like, Bitcoin has been in its own kind of realm while alts have been suffering. And I think that kind of came to the fore. Mid-November was when memes topped. Yeah. Well, at least like a lot of like the Solana memes in particular, they were running really, really hard and everyone thought, oh, Trump inauguration, we're good. Hold your meme coins. By the way, when I say everyone, I'm talking about me. And this is the thing of like, I think people got so kind of like rinsed on memes and like the hyper speculative side of the market that was doing so well for so long. There was like a good year from like, mid to late 2023 where everything just ripped. There were multiple big pullbacks, but it was still in that general like lockout uptrend. And so I think people were really, really surprised that was, the last pullback. They're like, no, Trump's getting in, we're fine. And then just sat on a bag that just...
Yeah. Well, that was part of why we said a pullback's coming is like the sentiment was way too heavy in the direction of bullish when Trump took over. And it was like, look, we're still bullish, but we need a correction here. Now, that correction got tied into this little mix-up of we also need a growth scare and like some political stuff. And so like it's kind of, I guess, worse than what we initially thought it would be. But ultimately, I think it's still all good and there's not really much to get concerned about. What's really funny is like everyone's so upset right now because we're down 30% in Bitcoin, 50% in ETH. And it's been, 3.5 months? And it's like, look at 2024. We pulled back starting in, I think it was March, maybe April. And we didn't get up again until November. We had like an 8-month pullback and we went down almost 30 or more than 30% in Bitcoin and like 50 or 60% in ETH. So we did the exact same thing just last year, just a few months ago. And yet everyone is like up in arms and losing their minds. It's like, dude, we just did that. 2023, same thing. We pulled back in May and we didn't go up again until October. So we had a 5-month pullback. And I'm like, we do this every year. What's the issue, But the issue is, as you said, like the highly speculative stuff like meme coins, they got absolutely wrecked. Not just a 30, 40, 50% pullback. They're down like 80, 90, right? And so a lot of people got wiped out, but yeah, that's what happens when you play that game.
Yeah, that is the inevitable thing. Everyone says like, I'm built different, dude. I'll sell the top. Yeah. And it's like, yeah, probably not. I saw you post about essentially this shift from a vibe market to fundamentals. What's your reasoning behind the move away from the vibe market to fundamentals? Like what are the drivers behind that kind of reasoning of like, okay, we're going to stop playing around with like hyper speculative bullshit and we're going to go to stuff that actually that matters?
Yeah. There's actually a few reasons for this. One is more kind of zoomed out on a macro level, let's call it. And then one is more in the crypto space specifically. But when I say vibe market, think 2021, right? Like people were investing not on fundamentals or anything. Everything was just way overvalued. And it was like people were just punting anything. NFTs, meme coins, meme stocks, like didn't matter. And that's because we were printing a shit ton of money all around the world. They were giving stimmy checks to everybody. And it was like, hey, here's $1,000 or $2,000. Like, go do whatever you want with it. And people are like, all right, vibes are on. Let's go. And
Doge it is. Yeah.
Yeah, exactly. Right. And we've kind of lived that life, not as 2021 was kind of like the biggest of it all, but we've sort of lived that for like 10, 15 years now, right? Like the governments just print money. We've gone into huge debt and big deficits. And we've kind of just lived in this market of markets still go up, even though like things don't look that good underneath the hood, but it's because we're printing money. And so there's money to go somewhere. And so it goes into the Meg 7, it goes into Tesla, it goes into whatever, right? So we've always lived in this like vibes economy for a long time. And I think what the US is trying to do, which is also, again, why we're in this pullback, is the US is trying to flip that. And they're kind of saying, Scott Bessent, the treasurer of the US, he was like, we've been in a vibe session for a while. We want to get out of that. And so they are now laying off a bunch of federal employees, trying to like shrink the government, print a lot less money in that world, and instead move all those people to the public or the private sector, right? Move them into actual companies that are making real money. And so you can see from the like office perspective or the macro perspective, the governments are trying to move people and trying to move the economy into like a fundamentally driven economy and get out of this like vibe session where we just have to print money all the time. Will they succeed in that? Like, I don't know, but that's kind of their goal. And so they're trying to balance the deficit and they're trying to shrink the government and get everyone into the private sector. So in that world, companies with strong earnings are going to do really, really well. And so I think we're going to see good companies get good valuations. They're going to grow and they're going to do really well at some point, probably this year. And then in crypto side of things, it's like same sort of idea. We're going into a world finally where the first time in 15 years that crypto's been around where we actually have real products. We have real things, businesses in this space that like have real customers. They have product market fit. They solve problems for people and they're generating real revenue. This is things like DeFi, this is things like Coinbase or even Robinhood, right? Like these are like real legit companies using crypto to settle with stablecoins on weekends, right? Stripe integrating stablecoins because it's just a better process and better, cheaper thing that's more efficient for their customers. And so it's like we're finally moving to a world where crypto is like doing what it always said it would do. And I think that we're going to see that reflect in the valuations at some point. We're already kind of seeing it. I mean, all the speculative stuff has been completely wiped out. Now, that'll probably come back in certain pockets, right? I don't think just everything will go up again like we had before. But I think institutions are definitely here this time. They're coming. We just saw it. This like the Digital Asset Summit that was last week in New York. Every institution right now is so bullish on crypto. And then you talk to any crypto native or retail investor and they're just like, oh my God, I'm exhausted. Bull market hasn't started. Like, I'm so fearful. And then you talk to institutions like, yo, this is going to be the greatest bull market ever in crypto. And so there's this huge divergence. And I just think as institutions start to come in, as we get the stablecoin bill and the market structure bill, and just like their confidence to come and use crypto, they're going to come in and they're not going to buy Fartcoin. Right? Like they're going to buy one, they're putting their assets on chain with stable coins. They're putting the real world assets on chain. So like they're actually using this stuff. And then I think they're going to buy the protocols and the assets that actually like facilitate that, which again is probably DeFi and maybe some L1s, things like that, where they'll actually use and understand. And that generates revenues. And again, has product market fit and like real developers, et cetera. I think that capital, which there's trillions of that capital, that's going to go there. And it's not going to go into the speculative stuff. So that's my kind of thesis around, I think we're shifting from a vibes market to like a fundamentals market.
That's probably one of like the most reasoned takes that I've had on the pod so far around that shift to fundamentals. I speak to a lot of degens. I hang around with like a lot of guys that are like, no, trust me, dude, like Fartcoin's where it's at. And I feel like this Fartcoin run at the moment, just even going from like 20 cents to 60 cents or something like that, everyone's like, it's meme super cycle again. I'm not going to bet against memes, but I'm definitely not allocating to memes like I was in the past. Yeah.
As much as I'm fundamentally strong and like that's what I look into, I'm not saying that nothing else will go up. Of course, degens are going to degen, traders are going to trade. Like there's going to be alpha there. I don't know that alpha, and that's very, very difficult to find. Whereas like to me, it's pretty clear on the fundamental side, which there's not a lot of fundamentally strong things in crypto. And so you know which ones have real revenues and are buying back their tokens, et cetera, et cetera. And it's like, well, if I put my money there, institutions are going to be buying that stuff. So to me, it's a lot more obvious,
And the stablecoin side of thing is really interesting as well, because it's like, I've been looking at stablecoin regs coming through. Funnily enough, Tether was just like one of the best product market fits of crypto of all time, of just like, hey, what if we put T-bills on chain? And it's like, okay, there we go. That's it.
Great.
But yeah, in terms of protocols that I've been looking at, I think it was, and this is full Shilio, is like Athena in terms of like long-term kind of like value play, actually kind of like a technical background, like high AUM. If you're going to have stable coins come through, Athena looks like one of those things that, and I've been kind of like slowly just like sinking into ENA, and that's been like my fundamentals play on stable coins at the moment. But speaking of kind of like good companies that actually do things with crypto, I've seen you talk about kind of this battle between Robinhood and Coinbase. What's your read on who wins that? If it is a situation where someone, wins at all.
Yeah. So yeah, I've got a lot of strong takes on both those. I'm actually very bullish on both. And the reason is I know a lot of crypto people are like, no, screw Coinbase, screw Robinhood. Like this all has to be on chain and decentralized and blah, 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 self-custody. And it's like, I'm with you guys. I'm all for the ethos of crypto. However, the reality is 98% of the world doesn't give a shit about decentralization or self-custody or any of that stuff. And in fact, most of them want the complete opposite. Like, the last thing that my mom wants is to hold on to her own seed phrase and her own crypto tokens. She's like, what? Right? So like, most people in the world are never going to care about any of that. And so they're going to use the apps and the things where it's easy for them and there's good UX, et cetera. And the easiest and the best right now are Coinbase and Robinhood, right? And so they have millions of users. Robinhood, I think, is like 20 million users. Coinbase is like 10 million users. And so that's already your answer. Like, there's already more humans using Coinbase and Robinhood to trade crypto than there is on chain, right? And so like, it's I know people want to live in this like ethos world, and I do agree with all that, and I love all that, but like, ultimately most of the users are going to go to Coinbase and Robinhood because they have the budgets to bring people on, they have the good UX, they have the good apps, they have all the things, right? And what's really cool, what's happening with both Coinbase and Robinhood is they are starting to integrate with all the on-chain apps, and so they're starting to provide these services of DeFi and trading in their app. So instead of trying to get people who otherwise would not get a MetaMask wallet and come and like trade on chain, instead of trying to bring them to DeFi or bring them to a DEX, what Coinbase is doing is bringing the DEXs and the DeFi to the users, right? They're already there. Let's bring, they just integrated with Morpho. Let's bring Bitcoin-backed loans, right, into Coinbase app instead of making you get a wallet and come on chain. And so they're starting to do that. And I think Robinhood's going to start doing that as well. Right now, they started with just like, here's a bunch of crypto assets, but I think they're going to start to do a lot more. And so I think those two are something I'm really bullish on in terms of like equities and sort of being the UX layer of crypto. For a large sum of people. Again, not everyone. Some people will come and just use things on chain. But I think both Coinbase and Robinhood are going to have the bulk of the people that are going to be trading and doing things. Now, in terms of who wins out, they're kind of taking different strategies here. Like, Robinhood is the everything trading app, right? So I can trade my crypto, but I can also trade, prediction markets. They have stocks, of course. They've got commodities, etc. Coinbase is just crypto. They're more of the crypto native. But I think they're both going to end up doing the same thing. Coinbase is probably going to launch stocks, and they're going to launch, probably gold and things like that, but tokenized versions, right? And so they're going to end up competing on similar things. Where I think Coinbase actually has the edge more long-term is everything is going to go on chain in the future, right? We've already said stablecoins, dollars are coming on chain at insane amounts. There's like $5 billion coming on chain every single week right now in stables. Real world assets are coming on chain. Tokenized stocks, those are coming on chain, right? Like, everything's moving on chain, and the company that is most set up to capitalize on that is Coinbase, because Coinbase is already sort of reinventing their own business, right? Like, at some point, more people will be on chain than on like an app. And who's already kind of pushing that innovation? Coinbase. They've got Base, they've got Coinbase Wallet, right? They've got like wrapped Bitcoin. They've got all these things that you can do on chain already. So they're almost like disrupting their own business in Coinbase already through Base and everything they're doing there. It's kind of like what Apple did with the iPod and then the iPhone, right? They disrupted the iPod. The iPod doesn't exist anymore, but it's because we all use the iPhone. Or they disrupted iTunes with Apple Music, right? They just found better ways to do the things that they originally did, and people became more and more online. Coinbase is doing the same thing, but people are becoming more and more on chain. And so I think Coinbase, as the sort of crypto native company that's building a lot of the infrastructure and like tools in the crypto world, I think they're better set up to I guess like capitalize on whatever happens in the crypto world down the line, right? Like, that's if Coinbase wanted to, they could remove all trading fees right now, and instead they can charge fees from the execution from Base underneath, right? Or they can charge through like taking fees from like people who put their Bitcoin in CB Bitcoin. Like, Robinhood doesn't have any of that stuff right now. The only thing they do is on trading fees or like through volumes of trading fees, right? So it's like Coinbase just has a lot more pricing power and leverage, I think, as more and more things go on chain. And then the last thing is Coinbase right now custodies $400 billion worth of crypto for, the rest of the industry. That's 15% of the entire crypto market cap. And so one of the things about financial institutions that really matters is trust. And MicroStrategy, who owns the most Bitcoin in the world, who do they trust to custody their Bitcoin? Coinbase. BlackRock, who do they trust to custody their Bitcoin? Coinbase, right? Like, the list goes on. Every ETF, everyone big in crypto, they all trust Coinbase to custody. And that, as more and more institutions and more capital comes on chain, like, that is a moat in of itself that no one else in this industry has. And so I think Coinbase is just set up to dominate over the next few years.
Coinbase definitely has more like tools in the toolkit
Yeah,
of
exactly.
like levers it can pull to essentially like compete at a level where if things get nasty, they can be like, well, I actually
Yeah.
don't want to do fees that way. You can kind of almost like greenfield Robinhood in that sense.
And they're integrating it all together, right? Like it's almost like Apple, right? I really think Coinbase
Mm.
is doing what Apple did for the internet. Coinbase is doing for the on-chain crypto world, because like Apple was like, okay, we realize everyone's going to go online, and so we have this hardware device, computer or phone. Let's start building things like iCloud because they're going to need to store pictures. Let's start building things like Apple Music or iTunes because you're going to want to listen to music. Let's create Apple TV because you're going to want to watch movies. Like everything, like just go down the list of the things you do online. A lot of that is using things that are Apple products, right? You want to browse the internet, they have Safari, right? You want to text message people, they have iMessage, which is better for a lot of people than text messaging, right? It's
Getting
like,
the green bubble and being like, oh, no.
exactly. So it's just like Apple just created the UX of the internet and just started branching out, and that's exactly what Coinbase is doing right now. Like they originally launched an NFT platform, didn't work, but what else have they launched? They've launched an L2. They own most of Circle, right? So they have their own stablecoin. They have the most successful L2, the most successful stablecoin in terms of growth over the last year. They have, Morpho that they've integrated into their app. The list goes on and on and on of all the things Coinbase is doing. So it really feels like they're trying to control the whole UX. They have a Coinbase wallet, don't forget, Coinbase Commerce. Like they're just doing it all. So it very much feels like Apple.
No, that is the thing. I think that, a lot of decentralized products think that somehow people are going to become enamored with the ethos of crypto, and that's going to be the reason that they come and use their product. I would say the only thing that I see is like, it's still really small scale, but the only thing I see is like a disruption to that is it's the new company. I've had Kane on the podcast a few times, but it's Infinex. And that's essentially doing like SEX front end, but with DEX in the background. And they're trying to solve that problem of custody. I think they're doing pretty well. But yeah, I think that's like one of the only products I've seen in crypto go like, hey, what if we actually met users where they are? I think it is a bit of like an uphill battle in the sense that you're essentially moving out from a crypto native crowd out to people that aren't crypto native and saying like, hey, this is the product. It's really popular with crypto natives. It's growing quite well, but it is that thing of like, how do you get that broader market of mums, dads, grandmas to essentially be like, oh, I'm going to come on and use this.
I think both markets are going to grow. There's going to be more crypto natives that want to do on chain, and there's going to be also more people that are not crypto native but still want to do things in finance, right? And ultimately, I think all of finance is going to start to come on chain. And so, like, even banks are going to do this. They're going to integrate into Aave or Maker or whatever, right? And they're going to offer yield, but they're going to do it in the back end. It'll all be done on chain, but the user won't know that. They'll just be in their Schwab account or their whatever account, their PayPal account, right? So it's like there's room for both. You can have and build products for those that want to go directly on chain, and you can build the UX for people that don't want to be on chain. I think Coinbase is actually building for both, which is what makes me super bullish on them.
Well, that was something with stocks. Like I sold a couple of crypto stocks in December and was trying to move money around, but it took 4 days from execution to settlement in my account. And I was like, 4 days? It was on a Monday. I'm like, it's Thursday evening. What do you mean? How is this? I thought
centuries in crypto.
I just thought and I had capital move around. It's like as AI was happening and I was trying to like bankroll some more stuff happening. And I was like, this is taking 4 days. Like I literally was watching the account and it's like, yep, T+2 settlement. And I was like, this is ridiculous. If you were to smack this, at least even the execution side, 2 days, that's a bit rough. But the idea of like it taking another 2 days to clear the account, I was like, surely someone could put this on chain and it could just be like a...
Well, and in the tokenized stock world, which I think is going to come in 2025, I think we're going to have tokenized stocks in 2025. But as I think of that, and as you think through that idea, who's going to be the first one to have that? It's going to be Coinbase, right? Like, Of course, their stock is going to be the first one tokenized. And I don't think people realize how much capital, like to buy Coinbase stock, you have to basically be American or like, Canadians can do it. There's some other countries that can do it, but there's a lot of people around the world that can't buy it. And once that goes on chain, then anyone in the world can buy it, right? And so I think that the size of companies once they come on chain, can actually be much bigger than the size of companies when they're not on chain, right? So I think that's actually a really big bullish catalyst. And again, probably Coin is going to be the first one tokenized. I'm sure others will be as well, but like it's very likely they're one of the first because they'll probably be the ones that do it.
You're the company that's controlling tokenization. Which one are you gonna tokenize first? You know, who are you gonna open up the mode to? I think another interesting thing that's happened this cycle that a lot of people didn't expect. You kind of mentioned it before around like, you know, people that held ETH for a very long time, you know, probably aren't in the best psychological position now. Everyone's kind of been like, ETH BTC, it's going down alt season, and kind of waiting for that like 2021 style ETH dominance altcoin run. And the biggest thing that's happened there is that Solana has taken like a lot of the mind share and capital away from ETH. How do you see that playing out now that we're moving more towards, like, as you've said, a fundamentals-based market? Do you think that Solana kind of has, because they now have a bit more of a DeFi layer. They've got more applications that people want to use. There's DEXs that are actually like quite functional there. There's a bit more of an ecosystem. Do you think that Solana has, you know, PMF longer term outside of just being kind of like the meme coin casino? To kind of like continue its vamp of ETH over time?
Yes, I do. I think I'm bullish on both. I think both are going to do quite well moving forward here whenever markets decide to turn. I know there's a lot of people that, you know, we were early on Solana. We had called it to our community around $20, $25. And so like we've done really well on it, but we still hold it. And a lot of people have kind of, not a lot, but some people have given up on it. And they're like, well, it was only for meme coins. And now that meme coins are done, like it's gone. And it's like, absolutely not. We heard that with ETH before, back with ICOs in 2017. In 2018, during that bear market, we heard it with ETH back in last cycle with NFTs. It's like these things, if they have network effects, meaning do they have a lot of developers and companies building on it that rely on it, that care about it, then it will start to build more things and do more. And Solana's definitely doing so much more. They got DePIN, they've got AI, they've got meme coins, sure. They've got DeFi, they've got so much. And so like, I'm not concerned at all. I think both Solana and ETH are going to do really well here. Also, Solana is going to be the first to get the next ETF, it appears, because they've now got futures. So I think as institutions, again, that capital comes in, they're going to build on either Ethereum or Solana right now. And by Ethereum, I mean either Ethereum or their own L2 or something like Base. So the Ethereum world or probably the Solana world. And so I think capital will go there. I also don't think that the meme coins are dead or AI stuff is dead. I think all that comes back. And so like Solana's going to see a resurgence in activity. And so I'm not really concerned at all about either. I think Solana probably outperforms ETH just because it's much smaller, right? So just like the reason it's outperformed the last couple of years is it's just got some catching up to do. And I think that probably still continues. Though I would say more long-term, I'm more bullish on ETH. The reason is I think we're going into a world where apps that have product market fit, I think are going to start, and we're already seeing it, start launching their own chains. And so like you've probably heard the app chain thesis. There's been a lot of people that talk about this. And we're already sort of seeing this play out. You look at Uniswap, the best app that's existed in crypto, has the most product market fit. They've launched Unichain. Athena, who you mentioned, one of the best DeFi projects, at least in stablecoins, they just launched Athena Chain. Jupiter, the best DEX on Solana, launched Jupiter Chain. Coinbase, the best app or centralized exchange, launched Base. Kraken launched Inc. OKX, like all of them
Hyperliquid chain. Yeah,
exactly.
Everyone.
It's like everyone that, the way I see it is L1 blockchains or like integrated L1 blockchains like Solana or Ethereum. These are launch pads for apps. Okay. So you launch on there because there's already liquidity, there's already users, whatever. It's easy to do that. Once you are successful and you know that you control the users because you have the leverage because they're using your app and they're using your brand, not Ethereum or Solana, that's kind of hidden underneath, then you can start to move off. Now, why would you move off? Because you want to control the block space, right? Right now, the fees that everyone's paying is going to either Solana or Ethereum. These apps want that revenue, right? That's why Coinbase launched Base. They want to get that revenue instead of leaking that value to Solana or ETH. And as things like Celestia or Ethereum DA and stuff, as that improves, we start to get interop where you can launch your own chain, but your liquidity is like interoperable and composable with every other chain, right? We're not there yet, but we're very close. And so there's not really a fragmentation issue in leaving a chain and launching your own. And so I think what we're going to see is all the good apps are going to be launching their own chains. And I think Ethereum is best suited to capitalize on that because they are building products for app chains, right? Like Ethereum has built blob space, which is basically data availability. It's nerdy stuff, but they've built, if you're going to launch an L2 or you're going to launch a blockchain, you need to post your data somewhere. And right now Ethereum has a product to sell that to chains, right? And it makes quite a bit of revenue from that, and it should grow and make a lot of revenue from that. They also have settlement, which is L1s, right? Or other chains. They can settle their assets to the Ethereum blockchain if they want for like security assurances. And so like Ethereum is building not just for Ethereum, but they're building for a world where there's a bunch of chains, and they have products to sell on that. Solana is building just for Solana right now. Now, probably Solana will change, and in the future, they'll start to build things for app chains as well, because I think it's quite obvious we're going that way. But Solana's just a little bit behind on that. So it's why I think it's why Ethereum has struggled, because most people aren't seeing we didn't hit that app chain thesis fast enough, right? And so like people kind of were like, oh, there's nothing going on Ethereum. Meanwhile, it was just all being built on these other L2s. And so I think that plays out over the coming years, and I'm still very bullish on Ethereum as a result of that.
I think Solana's that place where, because I remember speaking to a lot of founders during the like AI boom, right final innings before everything kind of tanked, and the number of people that I spoke to that were essentially like, oh, we were looking at Ethereum, our developers were Ethereum devs, but they're looking for like high latency. And like high bandwidth, and they're just like, oh, okay, Solana's the place to be. So they were launching tokens there and like the initial apps. But a lot of these AI things are cross-chain. Like it wasn't necessarily like a religious decision of like, no, we have to build here. It was purely in terms of like, we get better throughput over here, so we're just going to start here. But they can kind of shift anywhere they'd like. Something I want to ask is most bearish on, most bullish on. If you had to pick like one or two things on either side heading into the remainder of this year. Sorry, shitty question, I know. But it's good for the content.
Most bearish on, most bullish on. I think I'm actually most bullish on Coinbase, which I know a lot of people hate, but that is what I'm most bullish on. I have this prediction out and kind of writing some more thesis onto it that Coinbase is going to become $1 trillion company by 2030. So I'm extremely bullish on Coinbase. The other one that I'm extremely bullish on, I would say, is Sky. Or Maker, is what it used to be called, mainly because it's sort of a competitor to Athena, but they're also very much integrated and they work together, so it's not really a competitor. But Sky has just created this, like, in my opinion, the best product in crypto, which is they have, so like a stablecoin is obviously the best use case that we've created in crypto outside of Bitcoin, and in terms of like solving real world problems, and Sky has created this stablecoin that natively generates yield. But the yield comes from many different avenues. It can be from RWAs, it can be from treasuries. They have some like new stuff they're doing with like energy and using solar to like sell those contracts. And like that creates a yield that they can put underneath the backing of these stable coins. And so it's like what Sky has built is probably the best risk reward or risk return yield on any stable coin. Which right now it's I think 6.5%, or maybe they're even bringing that down, but it's much better than like a U.S. Treasury, and yet it's basically just as safe, and it's highly liquid, meaning you can move billions of dollars in and out of this thing. And so I think it's like one of the most beautiful products that I think we've created here, and most useful products. And so I see a world where that gets a lot of adoption. Like, for example, Milk Road, our company, most of our treasury sits in SUSDS because it was just sitting in dollars before. I'm like, well, why do we do that? These are basically dollars. They have real yield. It's not like Terra Luna from the years ago that is like this algorithmic stablecoin or whatever. It's backed by treasuries and other things that are generating real yield. And so I think there's going to be a lot of corporations that do that because, like, why wouldn't you, right? If you can get 6, 7, whatever percent, it just makes no sense to be holding dollars anymore. And as stablecoins continue to get adoption, like it's just set up perfectly to capitalize on that. So those are the two things I'm most bullish on in the space. Most bearish. I mean, I don't know if I want to pick on some of the like Cardano is probably the thing I'm most bearish on. But like, I don't even think it's fair to say that.
This is a safe place. This is a safe space to shit on Cardano. You're good.
Yeah,
You're good.
I often get yelled at for doing that. I would say this. I still am really excited about AI agents. Like it's one of the things I'm super pumped about. We're like building this in our company, like trying to figure out how to use AI agents. I think though that this idea of like investing in AI agent frameworks and AI agents today, to me, doesn't really make sense. I think that the reason why they pulled back so much is because it got so much like hype, And then when you actually look at what these AI agents are in the crypto space specifically,
Yeah.
they're trash. Like, read their tweets. They're not good. They're not going to be controlling anyone's funds anytime soon. I'm sorry, but like, we're not there yet. Now, I'm extremely bullish on AI long term, and of that, I'm extremely bullish on AI agents. So don't get me wrong here. I think it's the most exciting thing. But in terms of like the valuations of these things, it made no sense. And I still don't know when markets turn, if they're going to pump or not. Probably they do because degens will degen, but like to me, they don't make a lot of sense because they're actually not good. Like we went to build an AI agent and we actually looked at virtuals and AI16Z and we were like, these are actually crap. Like we went and we used like we used OpenAI and Grok. Like we used the ones where like in the AI world, they're developing and building at a much faster rate and like they're creating real stuff here. The AI crypto world, most of it is garbage. Now it will pump and it will do well, just like meme coins did. But a lot of it is actually not that great. So I don't know how to say that or express that, but like I'm bearish on a lot of it, but I know it's going to do well at some point.
Yeah, no, that was something that I had like AI16Z quite early. And I think I sold it at a loss right before it like 50x. So, but it was that thing of like at the time I had no idea what it did, and it wasn't until price went up that I was like, oh, maybe this is the best like thing since sliced bread. And then sure enough, kind of like that final innings of AI was where it was like, oh, we're essentially just launching a bunch of AI reply guys that add nothing. And I mean, AI XBT, it was a slop with a token attached. And AI XBT kind of had its moment in the sun, but again, it was one of those things where people started asking it more questions, and it was just being schizophrenic and being like, yes, buy this. Actually, no, that's the worst thing ever. You're like, wait, what?
What really turned me off was a couple weeks ago, or maybe it was a couple months ago now. I saw it put out a call for USD, one of the stablecoins. It was Aave's stablecoin Glow or Go, whatever it is.
Yeah.
And it was like talking about how its market cap and TVL is going up, or not market cap, sorry, but its TVL is going up. And like some new stuff that Aave was doing integrations with Go, and it was like bullish on Go. And I was like, that's a stablecoin. That's going to stay at $1. That's a terrible call. And I was like, okay, this thing's just like, all it's doing is going through, looking at the data on chain and just like basically referencing metrics, what's going up or what's going down, but it has no awareness of what it's saying it's doing, right? And I think that's where people kind of, they thought these things were aware and they're not aware, not yet anyway. So it's going to take more work.
That is the issue, is like with a bot like that, you're getting the average of the internet. Exactly. It's just scraping sentiment and being like, well, what's the direction of something? And it has no like actual critical functioning to be like, okay, this is a stable coin. It's not going to go up. Yeah, like there's nothing here for you.
We tried to create something similar to that, which is when we were looking at virtuals and AI16Z for Milk Road. We're like, let's just train it on all of our content. And the thing we realized was, we've got 4 researchers at Milk Road. I was like, we couldn't get the thing to be smarter than us 4. And so it was like, if it can't be smarter than us, then what's the point, right? Like I thought it could collect all 4 of our brains from everything we write, all the content we create, and then use that information on new things. And you just couldn't get to that point. It was good at summarizing past pieces of content. It was like a glorified search tool, and that's all we could get it to be. And so we were just like, we kind of shut it down for now, but like it will come. It will come. We're just still, it's too early.
Definitely. I don't think they're great at forward looking. It's great at summarizing, doing like really deep dive research if you're happy to like sift through and check for trust. But I think once they nail that, it's a great backward looking, here's everything that happened in the most important thing. But in terms of being like, hey, can you tell me what's going to happen? It's like, we can't even do that. Now, cautious of your time, but I did want to tack this on at the end. You very much built like Milk Road to be like extremely successful. 300K, follow like subs to a newsletter is no small thing. Can you do a quick run through of building that and what made it so successful in your eyes?
Yeah, I think so. Actually, first of all, we didn't start Milk Road; we acquired Milk Road. And so we weren't there from the very beginning, though. Through our marketing agency, we worked with it for quite a while before we acquired it with the founders. And so the thing about Milk Road that is done so well, and actually in general, I think we talked with a lot of other like newsletters and media companies through the marketing agency side, and especially as we talked about AI and going to a world where content is going to be everywhere. It's not hard to create content anymore. It's actually very, very easy. You can automate the shit out of that. The key thing is like, can you create a good personality, something that people actually like? Can you create a trusted brand? So someone that people actually trust and they want to listen to and they want to read and understand. I think those two are very, very important. And then can you build community? Can you actually like build a relationship with these people? Can you get in their shoes and like understand what are the problems that they're having every day when they're trying to invest, when they're trying to make money? And if you can like relate to those problems and you can speak to those problems, and help them kind of navigate through those, even if you're not right on everything, but if you can just help them think through those, then people really trust you and they really like want to be around you, right? And so that's your way of like really building a strong connection with your audience, which I think in media is the most important thing right now, is like building a connection, because anyone can create content, right? And we were talking to a few of the largest media like brands in crypto, and they were like, man, we still don't get really good open rates. We don't get a lot of good engagement, but we have all this massive, massive audience. You know, we're one of the biggest in the space. And it's like, yeah, it's because your shit looks like it's written by AI. Like, it's not fun to read. Like, I don't relate to it as a human. It's just a brand, right? And it's like, you got to get into your audience's shoes and like, you know, understand them, relate to them. And if you can do that, you can build really good connections online. It's not easy to build connections online, right? Like if you're in person with someone and you're going to talk to them about investing, you're going to relate to them. You know, you're going to really like, you're going to have a drink together. You're going to have a good time. You got to try to figure out how can you do that in your content, right? Because that's what separates you from other people, because otherwise everyone is trying to sell everyone everything, you know? And so you got to find your way to like, kind of like pull these people in and get them to trust you and connect with you. And personality and relating, that's the most important way to do it. And then obviously there's the, like, I guess like the thing that everyone says, which is consistency, right? Like keep putting out content and eventually you'll nail it, which is true as long as you keep iterating and making it better and better and better. But like if you want to skip all that fluffy stuff, it's like find a way to relate to your audience and niche, and you'll attract them.
Awesome, man. Dude, well, that's about it for time. Where can people keep up to date with what you're doing? You know, what are the social links where people can stay up to date?
Yeah, sure. So I'm mostly active on Twitter or X, so feel free to follow me there. It's just my name, Kyle Reidhead, which you can see on the screen here. So hit me up there. Otherwise, subscribe to Milk Road, milkroad.com. And that's where we give all of our investment advice, and well, not investment advice, investment advice. You know what I mean?
Not financial advice. Yeah.
Financial advice, not financial advice. And then if you're building in crypto and you need help with marketing, impact3.co is the website for my company there.
Awesome, mate. Kyle, thanks so much for coming on, man. Really appreciate it.
Yeah, thanks a lot, Tom. This is great.